Hi everybody and welcome back to Accounting 482. This is session 17. We just finished up our direct labor budget and we're about ready to head over to our overhead budget. But I have an error in my budget and I need to get that fixed. So if we will all go to the sales budget. Just click on over there to the sales budget. I did not add up my year 2 information here. It has copied over the Q1 of year 3. So what I want to do is fix this number here, the budgeted sales for the year, which will fix this calculation and fix the specialty bike budgeted sales number here for the year, which will fix the total revenue from specialty. And the reason I didn't catch it is because the numbers in the schedule of cash collections only works till Q4, and then that gets totaled inside that chart. So why don't we do an auto sum on year 2, and that will give us our total revenue from normal bikes for the year, and we can do the same thing in the specialty bikes, auto sum. Okay. So you should have total sales revenue for year 2 at $7,505. I'm sorry, $7,505,000 in your budget. And if we want to save that so that that's not how I wanted to do that. Let's go back there. We'll just save it. Oh, it's not going to let me do that. Okay, well, we will figure that out later. And so we just want to make sure that you have this saved so that your numbers are correct. We would have caught that when we were putting our pro forma financial statements together because this number would have been wrong. Okay. So you have to make sure that you add everything up and you know where the numbers are. I should have caught that. I apologize. But now that we have it fixed, we can move forward. Okay. So the overhead budget, we need to make that bigger so everybody can see. The overhead budget is just exactly what that says. We have our direct materials budget done. We have our direct labor budget done. Now we want to budget our overhead. So we need to go back to our document and look and see what we need to do. Once the materials have been received, it takes one employee 2 hours to build a normal bike. Oh, we've already done that. It's the second one right here. In addition to labor, the company also assigns a portion of manufacturing overhead to each bicycle, just like we've learned how to do in Module 1. Like many companies, Bob's allocates overhead on the basis of direct labor hours. To cover the variable overhead costs, that variable means it changes with each bike, that is attached to each bike, management assigns $1.50 for each direct labor hour. We don't have to calculate the POHR right now. They're just giving us that information. In addition, you will spend $250,000 a year on storage, space rental, and other set overhead expenses, 25% of which is depreciation. Now that'll come in handy later, but we will go back to our budget here and we will set this up. And so we've got our budgeted direct labor hours. Oh, I got the mouse. Too many mouses again. You'd think I'd learn how to organize myself before I started, but so much to look at. Okay. Budgeted direct labor hours. Oops. And then we know where we can find this information, right? It's direct labor budget. So we will link our totals, total direct labor hours needed. We're going to link that from the direct labor hours budget, and then we can copy that schedule that across. And maybe, yes, our yearly budget, our yearly total is right there too. Okay, so we got that right. Now I'm going to look at that every time. So now we want to include our variable overhead rate. And now here we're going to have to go back to the basic information page and type this information in just like we have before. So we will jump over there, and now we have manufacturing overhead information on our basic information sheet. And we know that our variable overhead rate is $1.50. And we want to put that right here. We want to use the Write Justify tab here because we want the information here, which is closer to all the other information, but we want to leave enough room to type in our title. So we want variable overhead allocation. My C is sticking on my keyboard. How about that? Per direct labor hour. And this would be our variable rate. We want to put that so that we know what that is and make sure that that is variable overhead allocation. Okay, and we want to type in $1.50. I'm not going to do that. 150, and that is not what we need. We need to we're just going to go in here to our format cells. We want to do currency. We want no decimal places. And then I'm just going to have to put my decimal there. So, no, now we want them. Look at that. Oh, did you guys hear that? That's annoying. Would not let me do that. Okay. I don't know if you guys can hear that, but I can hear that so loud in my ear, and I'm afraid to put this on mute because the silent movie thing. Oh my gosh, that was just terrible. Okay, now we want to do the next line down. We want the fixed fixed overhead per year. Okay, and again, I did not write justify that, but I can go back and do a write justify, and that pops that back over there. And we saw in that in our paper that is just not going to work for me. My column is not big enough for my number. That's probably got some wrong formatting in there. No? Oh, it's got 3 decimal places. That's why it's not working. And we want to do that. Okay, now it came up with the right number, $250,000. And now we want to write justify again. And we want to put the amount of fixed overhead from non-cash items. So, and the reason we want to separate that out is because we will do a payment schedule here, and depreciation is not cash. So we need to pull that out. And it said in our document right here that 25% is depreciation. So we want to include that here. And we don't want that to be $1. We want it to be a number. And we want it to be a percentage. So, and as you can see, you can use these tabs here. You can use the whole format cells tab here. You can do so many different ways you can get your formatting the way you want it. Most people will find a way that works for them, and then they'll just stick with that. So I tend to play around with how I want it, use different tools. So That's just how I do it. Okay, so we want to make these assumptions, so we're going to give them our assumption color because these can be changed. But we've typed them into our basic information page. Now if we want to go back to the overhead budget again, and now we want to link our rate because we have that typed into the basic information page, and we want to make that a permanent link, which I didn't do because I pushed enter too quick. We want to make that a permanent link, and we want to fix the formatting to currency, and that's what we want. And then we want to just drag that over to get the 150 there for every time. And I'm going to drop this back. I know I make these little tiny mistakes. They are kind of tiny, but it just frustrates me, so I have to have my cheater there. Okay, so now we want to put a line there because we're going to do some math. And this is going to be total variable overhead. And we're just going to multiply these. Multiply the budgeted direct labor hours by the rate. And we're going to get our overhead rate. And I'm going to take away some, oops, wrong way. And then I'm going to format paint the rest of this chart, like 3 lines, so they'll look like that. And then I'm going to drag that across to get our variable overhead, total variable overhead for each quarter. So now we want to take a look at fixed overhead. So our fixed overhead, they have given it to us in a yearly figure. One thing I want to talk about the variable overhead rate. We use direct labor hours because we have that figured out, but you can use anything. You can use any driver that you choose. We just use direct labor hours in this budget because we have that available. You can use units, you can use anything that you want, but in this budget we're using direct labor hours. And also the variable overhead rate, that may change. That's just what is in our information, but you would do some research and figure out what predictor, what is the best predictor of your cost, your overhead costs, and you would use that and that rate. So there's some work that needs to be done coming up with these numbers, but since they're given to us in this problem, then we can just go with that. So now the fixed overhead was given to us as a yearly number. So we're going to link that yearly number from the basic information page, the $250,000, and now we're going to apply this equally to each quarter. And that may not be, normal in every instance, but we're going to do it in this budget. And you would say, well, fixed costs run, over the periods. And typically it does. And we're going to do that here. Trying to get too technical, and I shouldn't do that. Okay, so we're going to take this and we're going to do the first one. We're going to do quarter 4, or you can do quarter 1. Let's do quarter 1 and then we can drag it right. So you can either start here on quarter 4, and I'll show you how that works. You can do this number and you can multiply it by, divide it by 4 because there's 4 quarters. Okay. And that's going to give you your amount of fixed overhead. Or you can do this and divide it by 4 this way and drag it this way. Oh, you know why it didn't work? You know why? Because I didn't have this as a permanent reference, so it's pulling numbers. And that'll work. So when you have a yearly figure, you have to apply them equally to each quarter. And when you're working this way, you can get a total by adding up the quarters. So just know that you'll have to adjust that depending on how the information is presented to you in your information. Because you're going to have one manager that's going to give you quarterly information, and you're going to have one manager that's going to give you a yearly information. And you're going to say, oh, I got to figure this out. So that's how that works. Now we are going to do our total budgeted overhead. And we're just going to add up our total variable and total fixed overhead. And we can do that. And then we can multiply our total variable overhead with our fixed overhead, and then just run that across. Okay. And this here gets a double underline because we are done with this particular budget. Okay. Now we're going to figure out our total manufacturing overhead. Total manufacturing overhead. So our total manufacturing overhead is this number here, because we're going to, now since we've got our total budgeted overhead, we can get our POHR. And now we have to figure this one out. Okay, so we're going to use this number here. That's our total for the year. And then we're going to use direct labor hours. Okay, so we have our budgeted direct labor hours. And we're going to get this from our direct labor budget. And our total direct labor hours needed is right here. We can also use the number from, I'm going to use this here because I'm here, but we can also pull it from year 2 here. Okay. It's in 2 places. It doesn't really matter where you link it because it should all flow. But I could have linked it here just as easily as well. So I'll go ahead and do that just so it's on this budget here. And now we want to create our predetermined overhead rate for the current year. And it's our POHR. And we want to put an underline here. So now I know you're asking why we have a predetermined overhead rate for the year and we have included the variable overhead rate here. We need to include all the variable costs that go into the overhead budget. But now we need to find a rate because these are total budgeted overhead. And now we need to create a rate to apply to each job, just like we've talked about in Module 1. So here we want to take your total budgeted overhead and divide it by the drivers, which is the direct labor hours. And we need to do some formatting here. Not that far. So our budgeted overhead is $3.30 per direct labor hour. Okay, and I want to bold that so that we can all find it quickly. And now we want to do our schedule of cash payments for manufacturing overhead. Now, remember that all of our cash, we need to get all of our numbers to create this cash budget. So if we do our cash payments or cash collections with each payment, we're all set up to do that cash budget. So that's why we're doing those now. And we're going to link here. Actually, you know what I'm going to do? I'm going to copy this. I know, handy. I'm going to copy that and I'm going to put it right there. Paste. Okay, that's going to give us our quarter information, and then the line right above it, I'm going to merge and center and bold and put in our schedule of cash payments for manufacturing overhead. All right. Perfect. And then we're going to have our title here. Not bold, good. Total budgeted overhead. And we're going to subtract off our non-cash items, which is depreciation. Depreciation. Okay. And then the next line will be our cash disbursements, our total. Which is our payments. And if you have been in college for a while, you know that disbursements are payments. So I'm just going to include both of those. So now we're going to get our totals, and this is easy enough. This is our total budgeted overhead right here. And then we can just copy that over. Now our non-depreciation items. Now we found out in our information, which I'll bring up again, that our depreciation is 25%, which means that 25% is not cash. Depreciation is not cash. So what we want to do is we want to take our fixed overhead, which is right here, and I'm just going to check the formula. Basic information page. We're going to take this number here, and we're going to multiply it by the 25%. And we're going to make the 25% a permanent link because we always want it to go back to that. And this should have also been a negative. Okay. So we're going to subtract off that amount, and then we need to redo our formatting here because we want that black, but we want it in parentheses as a negative. And then we can just carry that over. And this here, we want to, I'm wondering, I'm going to try it. Ah, it did. It did give us 25% of that number there. Okay. Actually, it's of this 250. And now our payments, we can do our underline there, and then we can do an auto sum. And then we can copy that formula over. Whoa, no. No. If you don't get the right little piece of it, then it messes you up. Oh, and this has got the wrong lines. I'm going to take that line off and put that line there. Okay. So you should have $395,685 under your cash payments for year 2. And now we're going to try to, I do not know why it's doing that. I'm going to have to do that after the session. Okay. So I'm going to double check my time here on this one. 24 minutes. We're doing okay. I want to go into the ending inventory budget right now because I've got to finish 3 budgets in 2 sessions, and so we're going to get going here. So the ending inventory budget is going to give us several numbers. It's going to give us the, sorry, I should talk to you guys. It's going to give us the per unit cost, and it's also going to give us the ending inventory numbers that we need for the balance sheet. So what do we need in this budget? We need the ending inventory for the direct materials. We need the ending inventory for the direct labor, which we will have that. And then we need the direct labor or the ending inventory for the manufacturing overhead. Because when you put it into inventory, if it does not get pushed on to finished goods, it's still sitting there in your inventory. Okay? So we want to take A, B, and C here. I'm going to use line 2 just so it's a little easier to see. A, B, and C, and we want to merge and center that. And we want to put in item. And the next two cells, E and D, we want to merge and center those two. And we want to put quantity, because we need to set this up. Quantity. Okay. And then F and G, I want to merge and center that. I'm sorry, 3 of them. We want to include, no, just two, sorry. And put cost. And then the very last one in H, I want to put total. And then I will center that. And then I'm going to do, I'm going to do a bold underline under that, a thick bottom border under that, just so that this is a larger budget, so we will need to have that a little more separated out. And this is going to be the production cost per normal bike. Okay, and the first thing we have here is direct materials. And we'll go in that order, because that is how our budget is set up. And now, oh yes, guess what we get to do? We get to go over to the direct materials budget, and we get to put in we need to go up to the raw material needs for normal bikes, because we're going to, if we don't go there, then we're going to end up with our items or specialty items that we need for our specialty bikes. So we're going to go there. Or you can go all the way to the basic information page. I'm going to take a look at this. Let's go a little higher. Oh, no, it's just all in there. Okay. So ending inventory budget. And now the quantity, we're going to go and get this from our basic information page. And we should have probably gone and gotten this list. But as long as this is good and linked to everything, then it doesn't really matter. It shouldn't matter. So here's our units needed. And then we want to drag that down. Okay. And these are, we want a description here. And these are descriptors that you might need if you are using an item where you use a certain pound of something or eaches, and you want to just specify and get as much information on here so that there's no questions. When you do a budget, people reading it should not have any questions for you. It should all be very clear, very precise, exactly the information they want and need. So this is the units, 1.5 units, okay? And then the handlebars are a set, a set of 2. And then the seat is units, 1 unit. And then the rest here are units, brake units, gear shift units. Paint, we're going to say this paint is 1 can. Hopefully the paint only comes in one size of a can. If not, then you would have to say 1 8-ounce can, or however the amount is. But can you see how if you don't have enough information here, there may be an issue? So now we want to go to the cost, And we can take that right off of our basic information page again, and we can link that and then carry that down. And then we also want to have a descriptor here, and we can put per unit, and we can put per set here. I don't like that. I'm going to put this for 2 units also, because that makes more sense to me. And then here is paint $10 per can. Okay. And now we can just total this up, and again we can just multiply our framing quantity with our framing cost, and then we can just carry that down and it'll give us all of our information. And here we want to do the format painter all the way down. Look what it did. It went backwards on me. Okay, so let's go like that. And then here, because I didn't tell it, and we're going to have the black negative here. Okay. Now we can do with format painter. Let's see if that works. Yep. Okay. So now we want to put a bold underline here, and we want to do an auto sum here. And that's going to give us our production cost per normal bike for each one. That's what it's going to cost us. So we should probably title this total direct materials cost. So it's pretty handy. And now we want to do direct labor. And now our direct labor, we have several different kinds. We have assembly, and we have painting. And we could have linked these, but I didn't. I just typed them in. Let's go back and link them. Direct labor. And right there. And then right there. It didn't change, but now it shows a link. Where before that one, assembly would have been linked and painting would have not been linked. So now we have everything linked. So now our quantity of assembly hours, we're going to link that to our direct labor budget, and it's 2. And our painting, we can just go like that because that is linked. This is 2 hours, and this is 1/2 hours. And now our cost is on our direct labor budget. Down here, assembly, direct labor budget, right there. And we want to change turn this to currency, no decimals, okay. And then we should be able to just pull that down and get that, and that's per hour. And we can either type it or pull it down. And then we want to do the same thing over here. We want to multiply those 2 hours by the cost per hour to get our direct labor hour. And then we also want to add this up, or multiply it, I should say. Oh no, it's add. Silly me. $32. Okay. Now let's get our manufacturing overhead. And our driver is direct labor hours. Okay. So our manufacturing overhead per direct labor hours, we can add these two up, okay? Because that's how much total hours it takes to build this bike, 2.5 hours. And our rate, we want to put, or our driver, we want to put that here so we know, 2.5 hours. And now our rate, we have calculated this rate on our overhead budget sheet, and it's right here. Predetermined overhead rate for the year, $3.30. And we want to have fewer zeros. And this is per direct labor hour. Okay. And then we just want to multiply that out. 2.5 hours multiplied by $3.30 is going to give us this. And of course, this is not in the currency format. So it is. We want to keep the cents here so that, because our rate is per hour, and we really want to get that specific. On the main totals out here, we don't want that. We want it to be clean. But in here, especially for the rate, we definitely want to use the cents. And here we want to do this as currency to, no, not on the total. And we're going to OK that. And that's going to give us $8 an hour, or $8 a bike. And then we want to do we want to bold this, our unit production cost for the normal bikes. And we're going to add our 81, which is our total direct materials cost, our direct labor for each one of those, and our manufacturing overhead. And we're going to get a total cost for each normal bike of $120 per bike. So we have our direct materials, total direct labor, and our manufacturing overhead. Pretty cool. And now we're going to do the same thing for our specialty bikes, but I'm going to wait for the next video, so this one isn't quite so long. And then we'll finish that up and go on to the S&A budget next time. Thank you, and we'll see you then.